Hi everyone, welcome back to Be Rich. I have Sashwath with me. We have seen the markets moving today. Some shares in our list, some of them have been coming into value buy propositions. And I do hope you've been staying in your different coffee ranges and not getting overzealous and excited. Do remember we're in the long haul here. We want to build wealth. We want to take our time. There is no rush. No one is going anywhere. It's not something you can do in a day or a week or a month. This is going to take consistent effort over years to create the kind of wealth we're dreaming of. So remember this, especially when you see days like this, when it suddenly looks like there's great opportunities here and there, you feel like jumping up and down and running into the market. Hesitate, pull back, patience. So to understand why some of this may be happening, could be because of this. We really don't know, because these kind of things you can only look at hindsight. It's very hard to see it, why it's happening at that moment. So I thought I'd ask Shashwath's opinion on this and ask him to dive in a little bit about what's happening in the Indian market, globally and locally, and to understand this. Yes, Shashwath. So what is your take on all this?
Well, first off, we just have to accept that when a market is, I've quoted this sentence before, but when a market is overvalued or overpriced according to historical measures, and your earnings growth isn't as good as you expect it to be, isn't amazing, then an overvalued market doesn't require any reason to be volatile and even go down. There need not be any reason, because the economics of it or the finance of it tells us that, look, this is the natural order of things. If people are very optimistic and giving you a high valuation and your earnings aren't meeting that valuation measure, then you basically have to downgrade your valuation, because investors at some point have to take in real world information when they're valuing their companies. This is one reason, because Indian markets are near their peak valuations. This is a place where we've been very few times this sort of valuation range. This is something the Indian market seldom sees. And of course, there's going to be a lot of jitteriness, where we looked at it in the US market as well. Even though Nvidia posted such a good earnings growth, which normally we'd see as a very positive result, the market was not happy, and some of its stock price even came down, with even Google suffering from the same problem. So what I'm trying to say here is that the Indian market as a whole is sort of at this precipice, maybe, where even the slightest of shoddy earnings growth reports can basically tank our market. Secondly, investors seem to be a lot more jittery now, given all of that's happening in the Middle East, and what's happening in between the US and China, and between India and China even. So there's a lot happening in the world, and things look far more volatile than it did before. And a lot of the money which was sitting in India, so called an emerging market, which we're considered to be, this money might be going to places which is perceived as lesser risk, for example the US or any other country where it's not classified as an emerging market. So the places where money first goes from are emerging markets, just because we're considered more of a risky avenue. Thirdly, the advent of China. I mean, this is the talking point for this video, which is basically that China has now issued a turnaround in its economic policies. They're talking about stimulus. They're talking about padding out the investors and padding out the consumption in China. And this is something which is a welcome development by most investors. And they're more optimistic about it. And we know that money isn't an infinite stream which you can keep drinking from. There's only a limited amount of money to go around. And a lot of investors are taking some water from this stream and using it for some other purposes in China. So a lot of the money is now being directed from India to China, which is also possibly driving an FII sell-off in India. So what do you think about these points?
You're absolutely right. And what you have to keep in mind is each person comes into the market with different motivations. Like we enter the market as value investors to be here for a long time, to invest for a long time. So same way, other people come and participate in the market for other reasons. Not everybody who comes to the market are value investors or trying to hold on to stocks for a long time, want to be business owners. Their mindsets are very different because they come with a certain mandate in their hand. Let's say you take a pension fund in the US. or a certain fund in the US where they're committed to making monthly payments to their investors, to pay X amount of dollars every month. And they've taken all the corpus fund which they've had, they've given it to a fund manager. And this fund manager, in his intelligence and his skills, will divvy these pieces up, and he has spread them in the American market. He has spread it in emerging markets, like Shashwat says. And emerging markets are considered risky bets, in the sense that if it pays off fantastically. If it doesn't pay off, you may lose whatever you're putting in. Is that kind of mindset they invest in emerging markets when you're a fund manager. So you have to think of it from their perspective. So they move these coins around, this portion which they put in the emerging market, from different places on the chessboard in the whole gamut of emerging market. India is one slice, a big slice, but it's not the one big slice which is there in the emerging market. You have China and you have other smaller countries which are there. Those markets are also there. And the problem for the Chinese has been their economic cycle has been on a downward spiral for quite a long time, and their stock market has been depressed. Now, the Chinese government is talking about these stimulus plans not because they want foreign investors, not because they want to lift up their stock market. They are in a crucial situation domestically, culturally, societally. So they're trying to stimulate that. They want the consumers' demand locally to come back. They don't want to get into a stagflation or worse deflationary spiral. So they're trying to somehow prop it up. Is it going to work? I do not know. And do realize this is even some other foreign investors are saying it's a huge bet the Chinese government is taking. Is it going to work out? We'll have to wait and watch. But there's promise. And like I said, these emerging market bets are a gamble. So they don't mind. A lot of Indian investors might be thinking, but why are they moving to China? There's nothing sure. It's just been said. They're only plans. But you see a rise of 25% in their stock market in a very short span. Why? The reason why is because they're taking a bet. And if that bet pays off, the returns for these foreign institutional investors are going to be huge. And like Shashwat said, Indian market, yes, things are fine here. We are doing well. Our economy is going to grow. Like what Shashwat and me spoke about last summers. Fold growth is going to be there by 2040, 2050. Yes, everything is nice, but they don't have the time to wait for 10 years, 15 years, where our economy might go through a pause phase before it starts picking up again, revving again. So they don't have the luxury of time which you and me and all of us value investors have to say, okay, we will wait for 10 years, we will wait for 20 years. They don't have that luxury. They need to have things made out in a very short span of time. So they will, of course, pull it out here. If they see an opportunity somewhere else in their time frame, they can make some more money. And it's very understandable that you see this happening with institutional investors from foreigners. They're not going to be having this mindset me and Shashwat are talking to you about. Nothing has fundamentally changed in our companies. Nothing is fundamentally bad with Tata Motors or any other the big companies, Reliance you take, whichever is your darling. There's nothing wrong fundamentally that's changed for you to think why are they suddenly seeing a price correction of 10%, 12%, like Manappuram 17% or 20%. Why? There's nothing fundamentally wrong here. It's just that they're seeing better opportunities somewhere else. Believe it or not, even after 20% correction in Tata Motors, if you see a year-long spread on Tata Motors, it is still up, 20%, 30%. Manappuram, all these stocks are still up if you've been holding it for a year. So there's still profit people are pulling out. There are lots of people who have been telling me they're pulling their money out of Manappuram because they entered Manappuram at a much lower state. They want to check out on Manappuram and move to Dr. Reddy and make a play over there because of the share split. Dr. Reddy share split is what I initially wanted to talk about today, which I'll do with Shashwat tomorrow. But people move money. And this is what is happening in the market. It's not that fundamentally anything has become bad or anything that's become good. It's just that people are making their moves.
I'm in complete agreement. And yeah, nothing has fundamentally changed. And one more thing I'd like to add on is that in the long run, I'd rather bet on India than China because, not just because I'm Indian, of course. Yes, that's one angle
Yes.
of it. But the other angle is the fact that it's plain and simple that we're a democracy, we're secular, we're a country which respects individual rights. We're much closer in alignment to, let's say, the ideal Western standard of valuing democracy than any of our Eastern counterparts. Look at any of our neighbors. Look at Sri Lanka, look at Bangladesh, look at Pakistan, look at China, even Russia. We are we have always been a beacon for democracy in our geolocation, and we've always been a beacon for what it means to give our citizens individual rights. And markets always thrive in a place where freedom of individual rights is maintained. So we have this advantage over China where you can go on a public forum and say anything you want because our country allows you constitutionally to do this. So this is something which we have an advantage in. We have an open system. Anyone can look at our regulations and understand what's going on. And all things said and all criticisms put aside, SEBI is an organization working to the benefit of investors. They have been, even though some of their policies may be misguided at times, it's still an entity which, on a whole, is trying to work for the betterment of investors. So, the point I'm trying to make here is that we have a competitive advantage in comparison to China. We have a booming population. We have a democracy. We have systems, checks and balances in place to make sure that we don't get into faulty economic planning. So all things said, if given today 100 rupees, I would rather invest it in India rather than China and forget about that money for 10, 20, 30 years and possibly see huge returns in, let's say, 3, 4 decades. What do you have to say about that?
I'm in complete agreement with what you say. And that is what I want to be the thing you should focus on. Yes, it is scary when you see price correction of 20%, 15% on your stock holding. I get that. I understand that. But do believe in what you're investing. Do study the fundamentals of the company. If there is a reason to let go of a company because there's been a fundamental shift, do let go. Or you see a better opportunity where you know you're going to make better opportunity, then do explore that opportunity. Other than that, whenever you see value in these corrections and you want to enter the market carefully, calculatedly, and stay within your risk range. A lot of you wonder what is Tiffin coffee amount. Tiffin coffee amount is amount of money where you don't mind if it becomes zero. And a lot of you say, like, I spent off all my Tiffin coffee money in the first of the month. That is not Tiffin coffee money. No one can eat the Tiffin coffee in one shot in the beginning of the month and say, I'm done. That means you're not divvying up your portion. If you have allocated, let's say, 1,000 rupees as your budget for the month, divvy it up into pieces and then look. There are people saying, I only have 500 rupees a month to invest. There are opportunities at 500 rupees a month too. Believe it or not, it's not that you have to have thousands of rupees to make money. You don't have to invest thousands every day in the Indian market. You can invest even 500 rupees a month and still make money and still grow wealth.
Please don't borrow to invest because this is something which a lot of people have asked and they talk about.
Yes,
It's not a good idea. Please don't do it.
correct. That being said, I do hope you enjoyed the video. I hope it gave you some clarity on what you saw today in the market or been seeing for the last few days. It may continue even further in the week or the month. We can't predict these things because Israel and Iran are still boiling. So keep an eye out when you see opportunities. Like I said, invest wisely and safely. Do like this video. Do comment below. Do share it with your friends and family, whomsoever you think might like this kind of content. And me and Sashwath, thank you for joining us today. And we'll see you again tomorrow, maybe with Dr. Lady Share Split. Thank you.
Thank you. Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it. And we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu. And these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.